All right, what's going on, guys? Chart Slinger here. So if we go in here and take a look, I'm going to be going through this PowerPoint slide here a little bit and be going back and forth between this and the ThinkorSwim platform. So you guys can follow along when you're watching this and go in and see if you can see what I'm trying to show you here. So this is, I think, episode 4. It's week 2. We're going to go through a little bit of technical analysis. I'm going to try to fit this all into 1 hour, but we may not get there. We may run a little over, but that's okay. All right, so first off, I want to throw in the disclaimer here. So we're not financial professionals. We're just retail traders and showing you guys what we've been doing to be profitable in the market. So you can go ahead and read through that disclaimer there, and then we will move on here. All right, so technical analysis. So according to Investopedia.com, technical analysis is a trading discipline employed to evaluate investments and identify trading opportunities by analyzing statistical trends gathered from trading activities such as price movement and volume. All right, so let's go in and see what this stuff is talking about here. So what we think about when we say technical analysis is charting. Right, so when we talk about the charts, we're talking about the candles and how price action is represented graphically in a chart. So let's go in and take a look at our platform, and here we go, and see what we're talking about here. So this is ThinkorSwim. This is my ThinkorSwim platform here. I've got this blown up to a weekly chart of the E-mini S&P 500 futures on a weekly chart. So let's take a look at these candles. So what does this mean? Okay, so if you've never seen this before, you might be thinking, oh, what the heck is this? All these pretty colors, looks like, you know, Christmas lights on the chart here. So what this is the candles, and all this is a graphic representation of what price is doing for this underlying, and the underlying being the S&P 500 futures contract here. So let's take a look at how these candles are formed. Okay, so these are based on time. This is a time chart, and there are different types of charts. When you go throughout your trading journey, you may look at things like that. You have types of charts like tick charts or volume charts, things like this. But what we're going to focus on here are time-based charts. So this is a weekly chart, and you have all different kinds of time frames. Traders like to look at the daily chart for swing trading, weekly chart, 4-hour chart, 1-hour chart, 30-minute, 15-minute, 5-minute, 1-minute, 3-minute. Okay, so what does that mean? So for every candle, this is what we call a candle, that represents whatever time frame that you're looking at. So this is a weekly, so one candle is going to represent 1 week. Okay, and how these are formed, you have green candles and red candles. So on a red candle, the open is going to be at the top, the close is at the bottom. We call this a bearish candle. The wicks, what you see these little lines coming down, is going to be the low, and it's hard to see that one, but let's look at this one here, and then the top. So on a candle like this one here, if I can zoom in, it'll let me zoom in. It won't let me zoom in anymore. On a candle like this one here, you've got the open, the close, the high, and the low. Okay, same thing on green candles like this one here. They start with the open at the bottom of the rectangle and then the close at the top. So this was a bullish candle. So it started down here, closed higher than the open. Okay, and we've got the low down here at the bottom of the wick, the high at the top of the wick. Okay, so that's how the candles are formed. Okay, so let's take a look at the next thing on our list, and that's going to be support and resistance. So what do we mean when we say support and resistance? Well, price fluctuates all over the place, right? So where we want to make money is between these areas of support and resistance. Let me back this out a little bit. 2 years is not enough. Let's go 20 years. Okay. This is really too much. Let's go down to a daily chart. All right. So here's some support and resistance. All right, so what do we mean by support and resistance? So these are going to be areas of inflection, okay? So areas like this right here, these tops and these bottoms. So how do we identify points of support and resistance on the chart? What I like to say is look left, okay? So let's say everybody knows that we've been going through some crazy times, right? With COVID-19 and everything. So let's say we're right here, okay? Let's say today was this day. And we want to know, where is this thing going to bottom out, right? Where are we going to get a bounce? Well, let's look left. So if zoomed in right here, you don't see anything, right? So we got to back out. Got to back out just a little bit. That's too much. Look left, okay? So if we look left, we see we've got points of inflection right here, right? Points of inflection right here. Points of inflection right here, where it bottomed out beforehand. So what I like to do is I like to take a horizontal line and draw it on these points of inflection. Previous points where the market said, oh, that was too much, we're going to roll over and test lower. Or, oh, that's too far down, we're going to roll back up and go higher. And those tend to be places where traders will be sitting and waiting for those prices to hit again, and they'll come in and make a move. And you can see here, we had this point from the previous, it blew right through it, but the next one down from right here, it bounced right off of it. Okay, here's another one. There's another one. So when we talk about resistance, resistance is going to be your overhead supply. Okay? When we talk about support, it's going to be the lower demand. Yeah, so they're right down here in the corner, where I like to take it from. I don't know if you can see it on the recording or not, but they're right down here in the right-hand corner. This little active tool, that's what I like to click on. Or you can come up here in the top toolbar, pull up your drawing tools, and it'll pull it up here as well. So this is the one I'm using right now, the horizontal line here. And then you got all these other things too. That's right. Yeah, and the cool thing about this is when you're drawing these lines out, these lines will come in really handy when you drill down to, and it probably won't let me now because we're way down here, but when you drill down into an intraday time frame, you know, these levels will show up on your intraday time frame, and you'll be able to see those major support and resistance zones where you can expect you know, some pressure to come in to push it the other way. And that's what we're looking for when we're identifying these zones. We're looking for areas where we can start to see a point of consolidation, because as traders we want to be able to anticipate those levels, so that when we find a break like this right here, this is a great example. When we find a break of these zones, you get a flush, because everybody who was betting that it was going to go up, guess what? They just got blown out. So they're ditching their positions and the market goes the other way, or goes lower. So that's what we're looking for in these zones. You don't make money right here, okay? Everybody's getting chopped up in these levels right here, in this zone. You make money when it moves from this level of consolidation to the next level of consolidation. This part right here is where you make money, all right? This zone right here is where you're gonna make your money. Work right there. All right, in here everybody's getting chopped up, but when it breaks that support, this line of support, that's where we want to be. We want to be getting in when it's breaking that support on its way down to the next level of support. All right, and that's really the point we want to make with support and resistance. So yeah, what's up, man? No. Right. Right. That's a breakout or breakdown. Right. Right. So this right here is an example of a breakdown of support. So let's go in and look and see if we can find a breakout of resistance. So here's one. We have a point of resistance here. Let me see if I can, yeah, there we go. So we have a point of resistance right here, and we get the breakout right here on this big candle. And that's where you would want to enter on that breakout. You also, that's a good segue into our next thing here. I can pull up my PowerPoint. And that's volume. Okay, so the volume is very important. And you can see here that we get a huge volume candle relative to the previous one when you get this breakout. The volume spikes up really big because everybody's going in right there. And then you get the move up. Okay, so this is volume down here. Same thing down here. You get the move into support, and you get the volume coming in, and they push it higher to the next levels of support and resistance. All right, so we're moving kind of quick here, but I want to go right into trend lines now. I already did that. I did that at the first part of the video. Yeah. Spent like 2 minutes on it. Yeah. But we can do it again if anybody missed that part. So kind of blow this up here. So you have two different kinds of candles. You have bullish candles, the green ones, and bearish candles are the red ones. So with bullish candles, let me back this out just a little bit. With bullish candles, you have the open is going to be at the bottom of the rectangle or the candle. So the bottom of the candle. The close will be at the top of the candle. And then the wicks, these little lines at the top and bottom. The bottom of the bottom wick will be the low, and the top of the top wick will be the high. For red candles, the bearish candles, it's going to be the opposite. So the open is going to be the top of the rectangle. The close is going to be the bottom of the rectangle. And the wicks, same thing, low and high. And again, what we're looking for are these areas of consolidation, or chop, as we like to call it sometimes. So areas like this here. Areas like this here. And this here. So I forget what the actual number is, but I think it's like the market is trending only like a small percentage of the time. The rest of the time it's consolidating. So like we said before, you make your money in between these areas of consolidation. Okay, so what we want to do is be able to identify these areas of consolidation at support and resistance, and then anticipate or catch these breakouts or breakdowns to the next level of support and resistance. So our entry would be after we get a breakout of consolidation, and we try to ride those trends to the next level of consolidation. All right, so the next thing, like I said, would be trend lines. So we have consolidation and we have trending. That's the two different types of activities that the market does. Okay, the market is either trending or it's consolidating. Two different things that it can do. So let's see here. I might have to back out a little bit more. It's too much. This thing's not wanting to cooperate. All right, here we go. So what I'm going to do is pull up a trend line drawing tool here. And I'm going to get rid of these here. Get rid of these boxes for now. And we want to draw some trend lines. So when we're in an upward trend, I want to draw my trend lines at least connecting 2 points of support with our trend line. So we got 1, 2, 3 on this one before we get the break. All right, this one here. Got 1, 2, 3 on this one before we get a break. In a downward trend, we're going to draw the trend lines along the upper resistance, connecting at least 2 points. Nothing on that one. And these are all kind of hindsight when you're actually doing this in real time. Of course, you won't see the breakout or breakdown of the trend line until it happens. You'll be drawing this, anticipating the break of the trend line. So that's what we want is to have the break of the trend line. All right, so let's see. Let's get another one here on this downward trend. And you can see, just if you're just using trend lines, I mean, you could be a profitable trader just using trend lines. If you learn nothing else from this training, this mentorship, just using trend lines properly, you can be a profitable trader. And excuse my kids in the background screaming their heads off if you guys can hear that. Sorry about that. And sometimes you get multiple trend lines within a larger trend line before they break. And you know, they can remount and keep going. But this is what we're looking to get here. We're looking to connect multiple points of support and resistance to anticipate these either bounces off the trend line or breaks of the trend line to go the other way. All right. Let me zoom out on this. So this is the current, what is this, the daily chart of the S&P 500 E-mini futures. So we're actually, let me move this actually, activate it. So we actually need to come up quite a bit more to retest this trend line before we get a breakout. So I would actually probably be expecting this one to you know, either go sideways for a little bit and then make another run at the lows here, or go ahead and sideways for a while and then eventually break out. So it's got a little ways to go on this one. All right, so that is trend lines. And you can see that, you know, that's a really simple concept that I think pretty much everybody can grasp. And like I said, if you just only learn how to draw trend lines correctly, I think you can be a profitable trader just being patient and using this one skill. Okay, I mean, look at that drop right there. That's a lot. What is that? Almost 300 points off of that one play there. So very valuable, very simple little thing to learn here if you don't know how to draw trend lines. All right, so the next little segue into the next thing we're going to talk about is going to be triangles. All right, so triangles. Yeah. Yeah, so I mean, a chart is a chart, right? We can look at Apple. Sure, why not? No, a chart is a chart. If you know, same thing. You know, all of these things that I'm showing you today can be applied to anything that can be charted. Stocks, penny stocks, futures, forex, cryptocurrency, if you're crazy enough to trade cryptocurrency. Not that cryptocurrency is bad, I just would never touch the stuff. But yeah, I mean, let's look at the euro, spot forex. Trend lines. Boom. So you can see whatever the product you're trying to trade, these simple price action charting skills should be able to help you a lot. Here's another one. Oops. Okay. All right, let me go back to Apple because I saw something good on Apple for the next thing that I'm going to talk about. So the next thing that I want to talk about was triangles. And all a triangle is an area of consolidation that's formed by trend lines. Okay, and this was a really nice triangle that I saw right here on Apple. Move these away. Not that. Okay, so when we say triangles, I'm talking about an area of consolidation that's typically getting tighter as time goes along. Okay, so we can see here with Apple, we have the long move down, grind up, sharp move down, slower grind up. It gets tighter and tighter until it consolidates so tight that they just can't hold it anymore and the bulls win out. Okay, and you get the move up, or like we call it, the breakout of this pattern. And you have these all throughout the price action. And yes, extend it out. Well, I bet if I drew it correctly, it would be. Yeah. So yeah, so what Sticks was saying is he's pointing out that a lot of, that, you know, as this line is extending, this old trend line that we had from this triangle got respected right here in the current price action. So that's a good point to make, that these old areas of support and resistance tend to come into play as time goes on. All right. And these triangles happen all throughout the price action. So, you know, you can zoom in to whatever time frame you want, and you can find a triangle typically. Here's one right here. You get that breakout. Okay, you can zoom in all over the place. This one's not as good, but it is there. You sound like Sorab's trading futures. Here's another one. Yeah, so these triangles, or pennants, if you want to call them pennants, they happen all over the place. If we drill down, you can drill down to a 5-minute chart, and you can see them all over the place. Here's one today. Apple going into the close. Bro, I can still hear your... Did you lose money or did you win? That's how we do it, man. Alright, so hopefully you guys get the concept of the triangles here. Alright, what's the next thing? Yeah, go ahead. Very cool. Awesome. Cool, cool, cool. All right, so the next thing that I want to talk about is patterns, and I'm only going to go over two, just for time's sake, but they're two very powerful patterns. And the first one's going to be head and shoulders. So this is not a real good head and shoulders here, but let me see if I can. Okay, so head and shoulders is going to be, you have shoulder, the head, and a shoulder. These are a reversal pattern. This is a reversal pattern. Okay, so this one here is an inverse head and shoulder. You can see we had and we actually have two of them within the same one. So first I'll show you the bearish head and shoulders. So you got the left shoulder here, you got the head, and then a little right shoulder here. And what we're looking for here is a break of what we call the neckline. And this right here is the neckline. If you draw a trend line between this support and your right hand support, you connect the trend line there. The break of that neckline or that trend line is going to be your entry. Okay, let me back some of this out. And let me show you the bullish one. Okay, so we've got the left shoulder here, the head, and then the right shoulder here. And the neckline is a little bit wonky jut on this one, but I would probably draw it right here. So the break of that one, and this is like a 5-minute chart, so that's after hours, but you can see how when it broke that neckline, you had the nice move up. So that's a head and shoulders pattern. And you can see, you can find these, they appear more on the lower time frames, like the intraday time frames, but they do show up as well in the higher time frames. When you can find them in the higher time frames, you can get some really, really good runs on swings. And for those of you that don't know, I don't know if we've gone over difference between swing trading and day trading. The swing trading, basically, you are going to be holding a position longer than one session. So you'll hold it a day, week, months, years type of thing. And then day trading, you're going to be closing out all your positions within the same session. Okay, the next thing we're going to be looking at is a cup and handle. So let me see if I can find a cup and handle. The cup and handle is typically a little bit harder to find. Yeah, the PDT, so it's a United States thing. Basically, it's the pattern day trader rule. So I think it's fairly new. I want to say they came out with that thing like early 2000s, maybe. But I may be wrong on that. You guys can fact check me. But yeah, it's the nanny state government protecting you from yourself, right? So basically what it says is you can't make more than 3 day trades or round trips within the same session within a 5-day period, I believe is what it is. So if you have a margin account under $25,000. So if you have a small account and it's a margin account, you can only make 3 day trades within 5 trading day period. And if you go over that, they can lock you out of your account for 90 days, right? And like I say, you can argue the reasons for that all day long, but an easy way to get around PDT is, number one, you can just swing trade and don't take any day trades, or you can go to a cash account and trade options. And we trade a lot of options, but with a cash account trading options, your money is settled, or the options are settled on what they call T+1. So if you make your trade today, you close it out today, the security is going to be settled the following day. So your money is going to be available the following day. So basically you can trade all day long in and out with as much capital as you have in your account. Exactly. Yeah, I think it's T+2 now. It used to be T3, but I think it's T+2 now. So you have to wait 2 days to get your money. Yeah. Yeah. Yeah, and if you if you like that thing, you can take only 3-day trades in a week. But for a lot of people, it's really hard to do because we're traders, right? We want to trade. We don't want to be, especially if you're trying to day trade. Only 3 in a week is kind of torture. But yeah, there are ways to get around it, and those are some of the ways to get around it. Oh, that's a great point. So with futures, it's considered a marked to market product, and so it's meant to be speculative. It's meant to be traded in and out all day long. So the PDT rule does not apply to futures. And the great thing that they came out with earlier this past year in 2019 is the micro futures contract, which we trade a lot, and which I think Saurabh is actually trading tonight because they're open and the nighttime is the micro futures contracts. So you have your regular E-mini futures contracts like the ES, and you got all different kinds of things. You got NASDAQ, you got the Dow E-mini, you got the Russell E-minis. You can trade oil, you can trade copper, soybeans, commodities, indexes. They even have Forex futures for people that like to trade Forex. So there's brand for every flavor, right? But the cool thing with the micros is that they created this new product that's 10 times less expensive as the E-minis. So currently today, and it's kind of inflated, right, because of all the volatility, but I think today the S&P E-minis are like 13,000 and some change for one contract, which is insane. But on the micro, it's 10 times less, right? So you only need like $1,300 to trade that. And back a month ago, when before all the coronavirus and the volatility spiked up to 1 million, it was only what I think almost like $700 to trade a micro E-mini for the S&Ps. So they really made it a lot more affordable for retail traders to kind of dip their toe into the space of futures trading, where you don't need a huge account to go in and start trading futures. So that's a really cool thing for newer traders as well. If you want to learn about futures, we can go into that later at a different time in the mentorship program. But we actually like to trade futures a lot because, number one, they're super liquid, so you don't have any problems getting in and out. They trade all the time. I think they're only closed for about an hour during the day, and any other time, if you want to trade, you can make a trade. And it's just price action. There's not a whole lot else to it. So we really like trading futures, and especially the indexes. We typically stick to the S&P just because it's really straightforward. You know, there are other things, like I said, like oil and Forex as well. Gold is another one. We'll trade gold from time to time, depending on the news. But you know, typically oil is pretty difficult to trade, in my opinion, just because it's tends to be very jerky and news driven. But those things are out there if you want to dip your toe into the space. They are out there. All right, where was I, man? I was looking for a cup and handle, I think. All right, so basically a cup and handle. I don't think I can find one here. I don't see one on this chart. Oh, maybe this is one. But it doesn't really, it's not a very good one. Let's see. It's probably gonna be hard to find a good cup and handle right now because everything's been so bearish. Well, I'll just use this one, and then you can just imagine the rest. How about that? Yeah, this one's okay. It's not too bad. All right, so basically what we're looking for is the cup. So we've got a long range. Oops, I'm drawing it really stupid right now. So you got the cup here. My pen's in the way. The cup, and then the handle. All right, so it looks like a big cup, right? Big coffee cup or teacup, right? So that's what we're looking for. You got the big bottoming pattern here. This big cup bottoming pattern. It ends up topping out and making a higher low, and the breakout is going to be this neckline right here. That's where your entry is. That's where you're going to be looking for the breakout to enter. So if you're playing this cup and handle pattern here, this is going to be your entry right here. All right, and these patterns can be flipped up or down. So if you had, you know, a bearish one would be something like this, and then up, and then down, your neckline and your trade right here, right? That's cup and handle. And you guys, I encourage you to go into your platforms and try and find these patterns. If you don't know what these patterns are, go in and try to find them in the price action. All right. So let me go to the next slide. My kids are brushing their teeth now in the next room. The walls are paper thin. All right, so the next thing is going to be reversible candle patterns. And I'm going to try my best to find these things, but so the first one's going to be a Doji. All right, so Doji, I cannot draw with this pen. Yeah, this is garbage. Your Doji is going to be, that looks terrible. the same ink color. I'm not going to do this for all of them. There we go. The Doji candle is going to look just like this right here. So basically an indecision candle where the open and the close are very, very close to the same level. And you got your high and your low. Either, you know, it doesn't matter close or far away. Basically you're looking at an indecision candle. Looks like a plus sign with either a long tail up or down, right? And my drawing on PowerPoint is horrific, so I'm not going to do that anymore. So that's a doji. All right, so let's go and look for a doji candle and see if you can find one before I can. Here's one. Right here. This is a doji. And the thing we're looking for in the doji reversal is the next candle, right? So you got indecision, and the next candle is going to show the way. That's the idea. So we got indecision candle here, next candle is bearish, and down we go, right? So that's a perfect example of a doji. We're kind of grinding up. We got the indecision, and then the reversal, or in this case, continuation, a reversal from the short-term trend. All right, so that's a doji. Next candle is going to be an engulfing. I don't know why I can't zoom in. But so the engulfing candle is going to be one that opens for bullish engulfing, and these can go either way. So I want to make that very clear. These can go both ways. Okay. Here's one right here. So we had price action moving to the upside. It opened higher and engulfed this whole candle. So the body of this whole previous candle is inside of this one here. This is what we call a bearish engulfing pattern. Okay, bearish engulfing. It engulfed this one. And then look what happened. You got a super big flush. It's kind of the same thing here on this doji. It engulfed the doji on down. Here's one here. Open below it, engulfed, and up we go. Here's one here. Opened above, engulfed, down you go. Here's another one. Alright, so that's engulfing. Next one is piercing, a piercing reversal. This one is a little bit harder to find, so let me see if I can find the piercing. This one is a piercing candle, but it's not quite what you like to see. So what I normally like to see with a piercing candle is that it closes at least above the 50% mark of this previous candle. So this one was almost a piercing candle, but it didn't close high enough. Probably why it was so weak. The next few here. This one you could probably call this a piercing candle, even though it's got that wick. You typically don't like to see the wick, but like I said, these are harder to find. But for sake of teaching you what it is, typically it should, for a bearish piercing candle, it should open higher, which this one did barely, and then pierce the previous candle, at least 50% or more, and then you should see a reversal to the next side. Oh my god. Sorry guys, hold on one second. Sorry about that. Okay. that's piercing candles. Here's a good one. Here's a good one right here. We had the big piercing candle and then moved up here. All right, next one is going to be a hammer. Yeah, sorry guys, my wife's trying to put my 3 small children to bed, so apologize for all the noise. But anybody that has kids will understand. Alright, so a hammer candle is going to be something like this here. So you're going to have the relatively smaller body and a long tail. Alright, so this would be a bullish hammer. So price came all the way down here and the bulls took it all the way to the top and closed it at the highs. So that is a bullish hammer candle. Okay, and they call it a hammer because this kind of looks like a hammer handle, right? Here's a good one right here. Came all the way down, closed really close to the highs here, and look what happened. All right, so all of these patterns that I'm trying to show you here are reversal type patterns. Here's a really good bearish, oh man. Here's a really good bearish hammer here. So you got the big move to the upside, bears pushed it all the way down, and it closed near the lows here. And you get the move down. Okay. Here's one that's actually green, but I would still consider that bearish because it closed towards the bottom of the candle. All right. All right, the next one here is gonna be what is referred to as 3 white soldiers or 3 black crows. And this may be a little bit hard to find, but I'm gonna try. Here we go. So here is a good representation of what you would call a 3 white soldiers. This one's not completely what you'd like to see. I'd really like to see this one here have closed a little higher towards the highs, but the effect was there all the same. So you want 3 good strong candles for a bullish reversal. Okay, so we got the big puke here, and then we got 3 strong candles. So based on this, you would enter long on the next candle, and you see you got the good move up there. Let's see if we can find the same pattern going the other way. May not be able to find it here. May not be able to find one for the bearish side, but you get the idea from the other one. All right. Yeah, I can't find it. Can't find one. Ah, here we go. So here's one. So you get 1, 2, 3, and down. It consolidated a little bit sideways, but then finally puked off. So that's it for what I have for TA, technical analysis, for this episode. I think next week we're going to be talking about indicators, but I think even if you learn all this stuff, you don't even need indicators, right? Because indicators are typically lag price action, and price action is what determines what happens with stock. So price, volume, trend lines, triangles, patterns, and you should be good to go, or off on your way to start being successful in the stock market or whatever market you're trading. Trend line. Learn how to use Trendlines, guys. Trendlines are your friend. Heard that one, right? The trend is your friend. All right, so that's what I have. Anybody have anything to add? Absolutely. Sorab, anything? No? Okay, well, if nothing else, then we will end it here. That was, wow, I did it. I made it in an hour, exactly an hour. All right. That's a record. All right, guys, we'll upload the recording here. Hopefully it recorded everything, but we'll upload the recording for you guys to watch it back. All right, peace.